It is President Trump's 99th day, and we are looking at the economic outlook. Earlier this week, the White House came out with a one-page tax blueprint that aims to slash rates for businesses and individuals. Now, the plan would reduce 7 personal income tax brackets to 3 and double the standard deduction that most taxpayers take. It would also eliminate taxes that are overwhelmingly paid by high-income Americans. So let's bring in David Nelson. He is chief strategist for Belpointe, and he's right here with us.
Thanks for having me.
Good to see you, David. So let me ask you about the president's tax plan, and I want to get your reaction to it and how it will impact ordinary Americans.
Well, we're going to come down to 3 tax brackets, 10, 25, and 35. I think the most contentious issue in here is a lot of people are worried about how this is going to affect higher income Americans, not just the middle class, because there is the potential for them to get around a loophole here. The corporate tax rate is going to go down from 35 to 15%. That's a good thing. But if uber wealthy Americans could somehow reincorporate themselves, somehow get a loophole and get that tax deduction, that's not going to fly. So I hope we see language to that effect. Look, cutting the corporate tax rate is really a good idea, and that has bipartisan support. The current tax code, 77,000 pages. We've got to do something about that. It encourages corporations to put their cash offshore, which they have. $2 trillion is sitting offshore. Part of this tax package is to bring some of that money home, get it into infrastructure and CapEx.
But you know what the critics say is, okay, fine, so now the government is taking in less money, and that means we're just going to increase the national deficit. Is that what you see in this blueprint?
You know, growth will certainly help, but it never pays for itself in the end. I'd be lying if I told you that. But we're sitting with a 2% economy. This morning's GDP numbers were below 1%. Now, to be fair, it's been below 1% or around 1% for the last couple of first quarters. First quarter's an aberration. But we're still a 2% economy. And to get from 2 to 3, that's a big hurdle. It sounds small, but it's huge to do that. And he wants to do something about that, and I think addressing tax reform is a good place to start.
So where is the balance between saving people money and lowering taxes and still having a stable economy and one that grows?
Well, growth is key. So you got to do something about the growth. Corporate tax rate cut, that's also key. The repatriation of funds, that could add a lot of jobs. But the question that I have as a financial analyst is, what will the CEOs actually do with the money when they get it? Will they buy back stock, which they've been doing for the last 10 years to boost their own paycheck? Or will they actually invest it in CapEx, because that's what will really drive the economy and jobs?
Right. You know, you talk about the bringing down the corporate tax and everything, but we already know that the effective corporate tax is much lower than 35%.
It's lower, but we're not
right?
competitive with the rest of the world.
Okay. So, but you know, what's then going to stop these corporations from still putting their money overseas? Now they'll just be able to have more money overseas. Like,
there wouldn't be an incentive to do that. By lowering the corporate tax rate, why would you do that? You know, you could have a reasonable tax here. You got to pay the tax somewhere.
That's what Arthur Laffer told us.
You got to pay the tax somewhere. My concern is with the cash sitting offshore, eventually it gets antsy and it wants to do something. And it will build factories in some other country. Let's get the money home and build a factory here.
Is it important to sort of zip up some of these loopholes, though?
Huge, yeah. I couldn't agree more. You know, he wants to bring the tax code down to something reasonable, and adding another couple of hundred pages to it isn't going to solve the problem. We started off with a tax code that was for an individual. You had one sheet of paper. I thought I heard Steve Mnuchin mention, or it was Gary Cohn in his speech in the White House press room the other day, that we spend 7 billion hours a year doing taxes. You know, that's ridiculous. It's great for the accountants, it's great for the lawyers, but it's not great for us.
Yeah. So let's talk about the stock market. What are investors looking for? How happy have they been with the noise coming out of the White House about what they intend to do with the economy, specifically with taxes?
Well, obviously the market has been pretty happy since the election, but there's a pretty big divide between, you know, campaign rhetoric and legislation. And I think the administration's understanding that right now. There's a big divide also between what we call, you know, the soft and hard data. The soft data is consumer confidence, which has been very, very high, but the hard data has been kind of suspect. It has been a good earnings season. We saw it last night in a couple of great stocks like Google and Amazon. Even earlier in the week, companies like McDonald's, DuPont, and others really had good earnings. And what I was very encouraged by, for the first time in maybe 5-6 years, we're actually seeing revenue growth. It wasn't just about the shenanigans of the income statement. They're actually growing the top line, and that's good news.
I want to ask you about the tensions with North Korea, though. Is that having an impact on the markets overseas, and should investors here be concerned?
Yeah. Yeah, I mean, North Korea is probably the biggest challenge we face as Americans and for this administration. It will likely define his presidency. You know, people forget that, you know, trade is a very effective foreign policy tool. And how we negotiate with China, because we need President Xi, we need China, they're the only people that can have any leverage over this country, and certainly this dictator who now has a nuclear arsenal. My concern is some of what I heard today coming in was that we're actually going to sit down and have talks with the North Koreans. That's a double-edged sword, because we could actually, you know, that could actually weaken our position, because it almost endorses some of the outlandish behavior we've seen in the last number of years. So kind of mixed on that.
Let me ask you one more question. The other big trade story that sort of emerged over the last couple day or so has been NAFTA.
Yeah.
This idea that first, you know, he was ready to sign an executive order to rip the whole thing up, and now, oh, maybe we'll negotiate. How are the markets reacting to that?
Cautiously, and I think I'm acting cautiously as well. The rumors were that there was going to be an announcement as early as this weekend, that a complete repeal. This is an agreement that's been in place for over 20 years, so it would obviously disrupt things. He obviously, from what I hear, he got a phone call from the leaders of Mexico and Justin Trudeau from Canada, asking him to walk back from that. He also talked to business leaders and realized that some jobs would be also lost. So the calculus changes, and he's going to have to think about it. But the good news is we're actually going to talk about this,
right,
because we've been getting the short end of this. There's a $60 billion gap in the trade balance because of it. So let's do something about it. Let's renegotiate it. They seem willing to do that.
And he is positioned himself as negotiator in chief, so it's a good thing that
Let's
he's
see
doing
if we can
what
get the
he
art
said.
of the deal going.
Exactly, exactly. David Nelson, always good to have you, man.
Thanks for having
you.
me.